Hey everyone, it's Julie here with Tip Ranks. Today, we're taking a look at 3 tech stocks with recent buy ratings from a top 1% Wall Street analyst. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I was perusing through some tech stocks today when I came across a few that all had recent buy ratings from a 5-star analyst. That analyst is Shaul Eyal from TD Cowen, who's currently ranked number 37 out of over 10,000 Wall Street analysts, putting him in the top 1%. These tech stocks also come in with unanimous strong buy consensus and price targets that would imply some double-digit upside potential. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into these 3 strong buy tech stocks. First up is a company called Cellebrite. Trading under the ticker CLBT, they're currently priced above $18 per share. They are fairly flat in the past year, having declined 15% year to date, but rebounding up 28% in the last 3 months. Cellebrite is a tech company that specializes in digital intelligence and forensic solutions, primarily designed to help law enforcement, government agencies, military, and corporate investigators extract, analyze, and manage data from digital devices and sources. They were founded back in 1999 and have grown to have significant operations in the U.S. They serve over 150 countries and deploy more than 60,000 licenses of their flagship Universal Forensic Extraction Device software worldwide. They'll be sharing their Q3 report on November 12th, and this does follow an earnings and revenue beat for their second quarter back in August. For that third quarter, analysts are anticipating earnings per share of 9 cents, which is a big swing from the loss of 99 cents in the same quarter last year. In their Q2, their overall revenue climbed 18% to $113 million, with annual recurring revenue growing 21% and improved profitability, with adjusted EBITDA increasing 29%. Near the end of September, we did have an analyst at JP Morgan who increased their price target on the stock. They said their last earnings report reflected a stable to improving macro environment for security software, and says that companies exposed to large enterprise budgets and high priority spending categories are better positioned. They reiterated Cellebrite as a focus list pick. Our top analyst Shaul reiterated his buy rating on Cellebrite on October 17th. He's rated the stock a total of 17 times, and his current price target is $25 per share. Overall, Cellebrite has 8 current analyst ratings, coming in as a unanimous strong buy. The average price target is about $22 for an upside potential of 19%. Looking at those price targets down below, they range from a low end with a downside of 3%, that's back from in August, to Shaul being our high-end price target 25, which would be an upside of 34%. For our second strong buy tech stock, we're taking a look at Evolv Technologies. Their stock trades under the ticker EVLV, currently priced at $8.22. They have seen explosive growth this past year, gaining 220% and are up over 16% in the last 3 months. Evolv is a security tech company specializing in AI-based weapons detection and screening solutions. They emphasize non-intrusive, AI-driven detection to replace traditional metal detectors with faster, more accurate alternatives. Creating safer experiences in high-traffic environments, the company focuses on touchless, efficient security systems that detect concealed threats without compromising visitor flow or experience. Their tech has scanned over 3 billion people since 2019 and serves clients worldwide, including stadiums, schools, hospitals, entertainment venues, and public spaces. They'll share their next quarterly report on November 13th. Once again, this follows an earnings and revenue beat for their previous quarter back in August, where they also increased their fiscal 2025 revenue growth outlook to be between 27 and 30%. For their Q2, they had a loss per share of 2 cents, which was 2 cents better than analysts anticipated, and revenue climbed 27% year over year to $32.5 million. Annual recurring revenue came in at $110.5 million, which grew 27% year over year, and they had their third consecutive quarter of positive adjusted EBITDA. And following that last quarterly report, our 5-star analyst from TD Cowen reinstated coverage on the stock with a buy, saying that under new management, the company's statements have been completed and their regulatory overhangs have gradually diminished. They say that Evolv reported healthy Q2 results and raised that fiscal 2025 revenue outlook as it sees momentum across major verticals. He then reiterated that $10 price target here on October 17th. And he's one of 5 current analysts with a rating on the Evolv stock, of course coming in as a unanimous strong buy. Their average price target comes in at $9.38, implying an upside potential of 14%. Looking at those price targets down below, they range from an upside of 9% to 21.5%. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Third on the list, we're looking at Allot Communications. Trading under the ticker ALLT, they're currently priced just above $10 per share. And this is another stock that's seen a lot of growth this past year, climbing 188%. In the last 3 months, they're up 27%. Allot provides network intelligence and security solutions to protect and personalize the digital experience. The company leverages deep packet inspection technology to transform raw network data into actionable insights, enabling better traffic management, application optimization, and threat protection. Their portfolio emphasizes scalable AI-enhanced tools for visibility, control, and security in 5G, IoT, and broadband networks, serving over 500 communication service providers and 1,000 enterprises. And similar to our other stocks today, they'll also be reporting in early November. They'll be sharing theirs on November 5th, and this does follow an earnings and revenue beat for their previous quarter back in August. Earnings per share of 3 cents beat expectations by 3 cents, while revenue climbed to over $24 million, which was up 9% year over year and also edged out expectations. Annual recurring revenue was up 73%, and they launched a Verizon Business My Biz plan. The company ended the quarter with over $72 million in net cash and equivalents with no debt. And it was just the start of this week on Monday where our 5-star analyst Shaul initiated coverage on the Allot stock with a buy, saying that the firm believes the company is positioned to sustain double-digit profitable growth in the coming years due to tailwinds within the cybersecurity market. Allot is addressing the underserved small business sector with a total addressable market opportunity of $10 billion. Also, just yesterday, they were initiated over at Needham with a buy as well. Needham said they see more room to run for the stock's valuation. The Allot stock does just have 4 current analyst ratings, but they do all give it a buy. And the average price target of $13.50 implies an upside potential of 30%. Looking at those price targets down below, they range from an upside of 21% up to 45%. So that is a quick look at 3 unanimous strong buy tech stocks, all with a recent buy rating from a top 1% analyst. Let me know your thoughts on these companies and whether they were on your radar before or not. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a fantastic day. I'll see you back here next time.